Income tax 2020. Adjustments to income, self-employed health insurance deduction. Come in, relax with income tax 2020. Adjustments to income, self-employed health insurance deduction. When considering our income tax equation, we are going to be on the second line, that be the adjustments to income. We can break out our equation into two halves, the top half being a modified income statement, bottom half then being the calculation of the tax and then application of the payments, credits to get down to the tax refund or the amount due. We're going to be focused in on the top half, the modified income statement, in on line 2, that being the adjustments to income. You could call them above the line deductions as opposed to the below the line deductions, which would be the greater of either the standard deduction or itemized deduction. So we're going to be concentrating in here up top, and so that's going to be, if we can get this deductions up top, they're going to be the adjustments for the AGI. Looking at the 1040, then we will once again be down here on line 10. So this line 10 adjustment is going to be supported by Schedule 1, and that's going to be a deduction to get us to this adjusted gross income number. So then that will be supported by the Schedule 1 Part 2. So here is Schedule 1 Part 2, which are the adjustments to income. So we're going to be concentrating then down here on the self-employed health insurance deduction. Now note, when we're considering the self-employed health insurance deduction, we're considering someone who is, of course, self-employed. The most common kind of way that you'd be thinking about self-employed would be someone who have a Schedule C type of business oftentimes. So if they have a Schedule C type of business, then you want to keep in mind whether or not you have the self-employed insurance that could be then deducted as an adjustment to income. So you'll also see then if they have a Schedule C type of business or self-employment income, then most likely an item in box 14, which is going to be the self-employment tax or the deductible part of the self-employment tax. So we'll then have a Schedule C that will be attached. The Schedule C will then feed into the first page of the 1040, not in box 1, but now you can see down here we have this box 8. There's going to be other, obviously, components related to the Schedule C, and one of the things that you want to be considering in that situation would be whether or not they can get an adjustment to income. That deduction then, rather than being on the Schedule C, typically being on the Part 2 of Schedule 1. So self-employed insurance deduction. If you are self-employed, you may be eligible to deduct premiums that you pay for medical, dental, and qualifying long-term care insurance coverage for yourself, your spouse, and your dependents. To understand why this might be, you might want to compare it to what would be happening in an employee and corporation type of situation. Because remember, like we talked about when we're thinking about the self-employment tax, the IRS kind of considers oftentimes the sole proprietorship as both the employee and employer. Basically, they're the employee of themselves, the employer. And so let's think about what would happen with a normal corporation and employee in general if they had the benefits of health insurance, which is often tied to employment. So for example, if the employer offered an employee health insurance benefits, then they would typically get a deduction on the employer side of things, on the C corporation tax return, and then the employee may have to include that in income. That income and may be subject into the self-employment tax, Social Security, and Medicare related to it. So if we wanted to mirror that on the self-employed side of things, we're thinking of ourselves as both the employer and the employee of ourselves, then you would think we should get a deduction then if we're going to be similar to what would happen in like an employee-employer situation for a C corporation, we should get that same deduction here. However, you can't really put it on the Schedule C because that would reduce the amount of Social Security and Medicare, which would be similar to the payroll taxes, the self-employment taxes. So we can't just put it on the Schedule C then, because it'll have an impact on Social Security and Medicare, and they want you to pay Social Security and Medicare on the tax before you get this deduction. So they had to put it somewhere else, and that's why you can think about why it would be on like Schedule 1 instead of basically on the Schedule C. Okay, so you can only claim the health insurance premiums right off for months when neither you nor your spouse were eligible to participate in an employer-sponsored health plan. So if you have the ability to participate in some other plan, then the IRS was basically saying we would want you to first have that the default, basically go into that other plan. If you do not have eligibility to the other plan, that's when this then would take place or be the case. For example, if you are single and ineligible for any employer-provided health plan during the last 6 months of the year because you left your job and started your own business, you can claim the deduction for premiums you paid for coverage during the last 6 months. So you have the last 6 months, you're not working for anybody else, you don't have access to the coverage, which many people have access to through their employer, then you're going to be self-employed without the access, and then you could basically possibly be able to deduct the self-employed insurance deduction. The deduction cannot exceed the earned income you collect from your business, so you cannot use the deduction, in other words, to have a loss. You can't say that the deduction for health insurance can't bring you into basically the negative that you would then reduce your income against like other W-2 income. Remember, the IRS is very skeptical of business losses, because business losses means that they're not only are they not going to get their share of your money, like your silent partner is not going to get their share, but you're going to possibly take that loss against other income, such as capital gains such as ordinary income, typically being like the W-2 income or something like that. And they're skeptical of that, right? So if you see a loss, then you want to make sure, what are the restrictions basically for a loss. So they will not allow you to have the health insurance deduction push you into basically a loss that you can then take on against other ordinary income. So for example, if your self-employed activity is a sole proprietorship that generated a tax loss for the year, you're not allowed to claim the deduction because the business didn't generate any positive earned income. Partners and LLC members who are treated as partners for tax purposes are considered to be self-employed. So if you're dealing with a situation, you're saying, okay, we have a partnership or LLC, that's a flow-through entity. So they still may be considered to be self-employed and may be able to get the self-employed health insurance deduction, even though they're part of a partnership or an LLC, due to the fact that they're going to be a flow-through type of entity. If your business has employees and you pay health insurance premiums for them, these amounts are deducted on the applicable tax form and line for the employee benefits program expenses. So if you're talking about the employee expenses, you're a Schedule C business, you have employee expenses related to the health insurance that you're paying for them. Well, those are benefits, and you should take that on the Schedule C because then it'll lower your taxable income on the Schedule C, and that will lower, the amount of taxable income that will roll over to the first page of the 1040, but it will also lower the amount by which you will be paying self-employment tax, Social Security, and Medicare, similar to the payroll taxes. So that's why if you're paying health insurance for, the employees, then you want to take it on the Schedule C. But for the employer, the IRS is basically saying, we want you to pay payroll taxes on that, even though we'll let you have the deduction for federal income taxes, and therefore you can't put it on the Schedule C. We want you to put it on the Schedule 1 instead. Here are the limited deductions for long-term care insurance premiums. Here's what you can deduct this year for long-term care insurance premiums. This is 2020, age 40 and younger, 430, 41 through 50, 810, 51 through 60, 1,630, 61 through 74, 350, and over 75,430.